Good evening, everyone. Welcome to the channel. Today I am going to talk about an energy interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Enn Energy Holdings Limited offers a diverse range of businesses and services, including retail gas sales, integrated energy solutions, wholesale of gas construction and installation of gas pipeline infrastructure, value-added business services, distribution and sale of piped gas, LNG, and multi-energy products, operation of vehicle gas refueling stations, low-carbon integrated solution, services, financial services, retail of gas pipelines, and related materials and equipment, transportation of oil products and gas sourcing and sale of LNG, wholesale and retail of LNG, CNG, gas equipment, appliances, and others. Enn Energy stock price increase, a misconception. Contrary to popular belief, Enn Energy's HKG 2688 stock price has not increased significantly by over 50.48% in the past year. In fact, the company underperformed the Hong Kong market, returning only 6.26% in 2024 and 15.96% in 2025. Several news events did have a positive impact on the stock, including the proposed privatization by Enn Natural Gas, a significant long-term LNG supply agreement with ADNOC, and innovations in digital intelligence and integrated energy. However, these events only led to minor increases in the stock price, not exceeding 10%. The misconception of a significant increase may be attributed to the rise of hydrogen energy concept stocks in 2024, which saw Enn Energy's stock increase by 1.29%. Nevertheless, recent analyses have shown negative or neutral sentiment towards the company, including a downgrade from Zacks Research and disappointing 1HF25 results. In conclusion, while Enn Energy has experienced some positive news events, its stock price has not increased significantly by over 50.48% in the past year. The primary drivers of revenue growth or decline in the company's financial performance can be summarized as follows. Revenue growth is primarily driven by the expansion of wholesale gas business, which saw a 17.2% year-on-year increase. Additionally, retail gas sales business experienced a 2.4% growth, and acquisitions of property, plant, and equipment contributed $470 million to revenue. The acquisition of businesses during the period also generated RMB 14 million in revenue. On the other hand, revenue decline was mainly attributed to the construction and installation business, which saw a 7.9% year-on-year decline due to downward pressure in the real estate sector. Integrated energy business experienced a significant decline of 17.1%, while retail business declined by 3%. Wholesale business also declined by 17%. Overall, the company's revenue growth was driven by its wholesale gas and retail gas sales businesses, while revenue decline was largely due to the construction and installation business and integrated energy business. Net income experienced a decline of 16% year-over-year, with a significant drop in net income from RMB 978 million to RMB 893 million, representing an 8.7% decrease. This downward trend is reflected in the lower net income figure of RMB 12,429 million, which represents a 5.6% decline. In contrast, profit margins showed some improvement, with gross profit margin increasing by 2.1% year-over-year to 15.8%. However, core profit from domestic businesses remained stable at 11.6%, indicating that the company's profitability in this area has not changed significantly. The company's financial performance indicates a consistent generation of positive operating cash flow. In both 2024 and 2025, the company recorded significant positive operating cash flows of RMB 3,266 million and RMB 2,645 million respectively. This trend suggests that the company is effectively managing its operations to produce substantial cash inflows from its core business activities. The company's debt level and interest expenses have undergone significant changes in recent years. In terms of debt levels, the total debts decreased by RMB 793 million from last year to approximately RMB 18,739 million. The net change in debt level also indicates a decrease, with new bank loans raised decreasing by 5351 compared to the previous year. Additionally, repayment of bank loans increased by 7417. Regarding interest expenses, there was a notable decrease of 5.9% year-on-year, in net interest expenses. Furthermore, interest paid decreased from RMB 439 in 2024 to RMB 196 in 2025. Overall, these changes suggest that the company has made efforts to reduce its debt levels and interest expenses, indicating a more stable financial position. The company's performance varied across different segments and regions. The retail gas sales business and integrated energy business performed poorly, with a 0.6% decrease in sales and a 17.3% decrease in sales respectively. In contrast, the wholesale of gas segment, construction and installation segment, and smart home business performed well, with significant increases in sales or provision of services. The overseas region was a notable underperformer, generating no revenue or gross profit. However, the mainland China region saw an increase in revenue by 1,096 RMB million from 2024 to 2025. The retail business also experienced growth, with a revenue increase of 1,497 RMB million over the same period. Overall, while some segments and regions struggled, others showed significant improvement, highlighting areas for focus and investment. Management's outlook: a focus on long-term sustainability. The company's management is optimistic about its future prospects, citing stable operating cash flow and sufficient funds for capital expenditure. This stability provides a solid foundation for the company's long-term strategy, which prioritizes sustainable development over short-term gains. The securing of long-term sale and purchase agreements for LNG further supports this approach, as it aligns with expected demand and is tied to oil and gas price indexes, providing a degree of pricing certainty. Overall, management's focus on medium to long-term business strategy suggests a commitment to steady growth and stability. The company's financial summary reveals that it has a history of paying dividends to its shareholders. This is evident from multiple references throughout the document, including pages 4, 17, and 47. However, there is no information provided regarding share buybacks, with some sections even stating none mentioned. That concludes the financial summary for Enn Energy. Feel free to comment below, and I will be happy to answer them when possible.